The Oracle Quant Alliance, building the backbone of the global tokenized economy. Introduction: the quiet revolution in finance. Every few decades, the world's financial infrastructure goes through a transformation so deep that most people won't even realize it happened until years later. The migration from paper to electronic payments in the 1970s. The rise of internet banking in the early 2000s. And now, the transition from digital money to tokenized assets. But behind the hype about crypto and central bank digital currencies (CBDCs), a quieter, more powerful revolution is taking place. A handful of enterprise technology giants, Oracle among them, are building the next generation plumbing for the financial system, tokenized payments, programmable assets, and cross-chain interoperability. And at the center of Oracle's new architecture sits something extraordinary, a technology called Overledger, developed by Quant Network, quietly becoming the orchestration layer for the world's digital finance. This isn't speculation. Oracle's newly unveiled Digital Assets Data Nexus makes it explicit. AI-powered data governance, ISO 20020 to compatibility, multi-ledger blockchain infrastructure, and secure cross-chain interoperability, all key capabilities that Quant's technology has pioneered for years. So what does this mean for banks, institutions, and ultimately for us? To understand that, we need to trace the pieces: Oracle's enterprise dominance, Quant's Overledger, ISO 20022's role in payments, and the convergence that's reshaping how money will move across the planet. Part 1: Oracle's grand design, the Digital Assets Data Nexus. Oracle has been the silent giant of the digital age. Powering 430,000 enterprises across 175 countries, Oracle's database and cloud systems are the invisible backbone of global business. When Oracle moves, entire industries shift. In 2025, Oracle announced the launch of its Digital Assets Data Nexus, a full-stack infrastructure for digital asset creation, tokenization, governance, and settlement. At first glance, it looks like another corporate blockchain platform. But look closer and the design reveals a roadmap for the entire future of finance. The architecture includes AI-powered data governance for analytics, compliance, and supervision, wallets, identity management, and role-based access control for enterprise-grade security. A blockchain ISO 20020 to Nexus, the bridge between blockchains and the new global financial messaging standard. Dynamic APIs for event orchestration and workflow automation, letting systems communicate in real time. Low-code tools for smart contracts and tokenization, democratizing how assets are digitized. And crucially, secure interoperability using atomic two-phase commit protocols XA, LRC, and SATP, ensuring transactions across multiple ledgers are executed safely. This is not about crypto speculation. It's about the world's largest enterprises launching tokenized securities, currencies, and payments, all with regulatory compliance and data integrity at scale. Part 2: ISO 20022, the new language of global finance. To appreciate why blockchain x ISO 20020 to Nexus matters, you have to understand what ISO 20022 actually is. For decades, global finance has run on Swift mount messages, an outdated standard built in the 1970s. It was designed for telex machines, not digital assets. But beginning in 2025, every major central bank and payment system will migrate to ISO 20022, a universal data-rich language for financial transactions. Unlike the old formats, ISO 20022 messages are structured, detailed, and programmable. They can carry far more information: who sent the payment, what it's for, and what rules govern it. This structured data enables automation, compliance, and analytics, but it also opens the door for tokenization and DLT integration. Now imagine a bridge between ISO 20020 to payments and blockchain-based assets. That bridge is exactly what Oracle's blockchain x ISO 20020 to Nexus represents, and it's the same bridge Quant Network has been building with Overledger. Part 3. Quant Network, the hidden operating system of finance. Quant Network isn't a crypto company in the traditional sense. It doesn't sell hype. It sells infrastructure, specifically Overledger, the world's first enterprise-grade interoperability platform that connects legacy financial systems, multiple blockchains, and regulatory networks into one unified layer. Overledger acts like an internet of blockchains. Instead of forcing banks or enterprises to pick one blockchain, it allows them to integrate with any of them, public or private, through standardized APIs. In simple terms, Oracle provides the databases and enterprise systems. Quant provides the bridge that lets those systems talk to all digital ledgers seamlessly. Overledger already connects to multiple DLTs, such as Hyperledger Fabric, Besu, Ethereum, and Corda, as well as traditional systems like Swift and RTGS. It speaks both languages, the old and the new, and translates between them using ISO 20022 compliant data structures. This is exactly why Oracle's new stack references dynamic APIs and event orchestration. That's Overledger's signature, API-based orchestration of workflows across chains and systems. Part 4 inside the architecture, AI, tokenization, and multi-ledger design. Let's unpack the technical layers of Oracle's Digital Assets Data Nexus. 1. Permissioned multi-ledger infrastructure. At its base sits Oracle's blockchain platform, Digital Assets Edition, built on Hyperledger Fabric and Besu, integrated with Oracle database blockchain tables. This forms the enterprise layer for issuing and managing digital assets within a controlled environment. 2. The AI database core. In the center lies the Oracle AI database, designed for high-performance data analytics, regulatory reporting, and compliance. It supports JSON, spatial data, and AI-driven insights, meaning every transaction, asset, or identity can be analyzed in real time for risk and compliance. 3. Public Chains Data Integrator. Here's where things get fascinating. Oracle explicitly lists integration with public blockchains, Bitcoin, Ethereum, and others through a Public Chains Data Integrator. This is the bridge that allows interoperability between permissioned ledgers like Hyperledger and public chains, precisely what Overledger enables. 4. AI-powered governance and compliance. In a regulated world, tokenization only works if compliance is automated. AI assists with supervision, anomaly detection, and real-time audit trails. That's how digital assets can coexist with banking regulations. 5. Secure Cross-Chain Interoperability (SATP). Perhaps the most crucial piece, Oracle's documentation references secure interoperability, eliminating reliance on vulnerable cross-chain bridges using atomic two-phase commit protocols XA, LRC, and SATP. SATP, the Secure Asset Transfer Protocol, is the emerging ISO standard for cross-chain settlement. And Quant Network is directly involved in shaping that standard through the IETF and ISO working groups. This means Oracle's architecture isn't using ad hoc crypto bridges. It's using formal, enterprise-grade interoperability, the very domain where Quant leads. Part 5. The Oracle Quant Connection, Evidence in Plain Sight. Back in early 2023, Oracle publicly confirmed the integration of Quant Overledger to its blockchain platform for digital asset solutions. Quant was featured on Oracle's partner network and co-presented on enterprise tokenization at the Oracle Cloud World event. Quant CEO Gilbert Verdian, a former Bank of England and HM Treasury cybersecurity expert, designed Overledger to solve one of finance's hardest problems: how to make legacy systems and new blockchains interoperate securely without replacing either. Oracle's digital asset stack embodies that philosophy. Every major component, multi-ledger infrastructure, ISO 20022 Nexus, dynamic APIs, SATP interoperability, aligns with Quant's technology blueprint. Even the architectural language is identical. Multi-DLT integration, API orchestration, atomic two-phase commit protocols, ISO 20022 compatibility. These are the same phrases Quant has used for years. So while Oracle doesn't need to advertise Quant on every slide, the fingerprints are obvious. Overledger sits beneath, connecting the dots, quietly orchestrating tokenized payments and digital asset settlement across ledgers and databases. Part 6. Why ISO 20020 to plus DLT equals the new financial internet. Let's step back. Why does this convergence even matter? Because the world's money systems are becoming data systems. ISO 20020 provides a universal language for that data. DLT provides the trust layer, a distributed record that can't be tampered with. AI provides the intelligence, making sense of billions of data points in real time. When you combine those three, ISO 20020 plus DLT plus AI, you get programmable finance. Payments that carry logic, assets that enforce compliance. Money that can move instantly across any network without reconciliation delays. Oracle and Quant are effectively building the TCP/IP of value exchange. Just as the internet unified disparate computer networks, this infrastructure unifies disparate financial networks, each with its own ledger, rules, and governance. In this model, your tokenized dollar, your corporate bond, or your carbon credit all become digital objects that can move securely across systems, from a blockchain to a central bank ledger to a corporate treasury database, all using the same standardized language. Part 7. Tokenization in action. How this changes everything. The implications are enormous. For banks, they can issue tokenized deposits or stablecoins backed by real cash, integrated with their existing core systems via ISO 20020 to messages and Overledger APIs. Instant settlement, reduced counterparty risk, better liquidity management for governments and central banks. They can pilot CBDCs and interbank settlement networks like the UK Regulated Liability Network or the ECB's DLT sandbox using the same interoperability standards. No need to reinvent infrastructure. For corporations, they can tokenize assets, invoices, bonds, real-world commodities, and automate cash management or treasury operations using AI-driven smart workflows. For investors, they get fractionalized access to assets once locked behind institutional walls. Everything becomes liquid, transparent, and programmable. And this isn't theoretical. Projects like HKMAS Bridge, MAS's Project Guardian, and Bank of England's Digital Pound work are already testing ISO 20022 compliant tokenization frameworks. The plumbing Oracle and Quant are building will let those systems interconnect. Part 8. The AI layer. Data governance meets intelligence. Tokenization creates value, but AI unlocks meaning. Oracle's AI-powered data governance means every token, payment, or transaction can be analyzed for compliance, risk, or fraud in real time. Think of AI agents monitoring millions of transactions, flagging suspicious activity before it happens, ensuring KYC and AML compliance automatically. This is where enterprise meets intelligence. And because the architecture is API-based, institutions can plug in their own AI models or regulatory modules, creating an open, evolving ecosystem for programmable finance. Part 9. From Web to Dominance to Web3 Infrastructure. Oracle dominated the Web2 era with databases and enterprise software. Now it's positioning itself to dominate Web3 by providing the digital asset infrastructure that underpins tokenized finance. Part 9. From Web to Dominance to Web3 Infrastructure. Oracle dominated the Web2 era with databases and enterprise software. Now it's positioning itself to dominate Web3 by providing the digital asset infrastructure that underpins tokenized finance. Just as AWS became the cloud backbone for startups, Oracle wants to be the digital asset backbone for global institutions. But to do that, it needed one missing piece: interoperability, the ability to connect everything. That's where Quant steps in. With Overledger, Oracle's stack doesn't just support one blockchain. It supports all of them. It doesn't just run tokenization on a single network. It orchestrates across multiple. It doesn't just comply with ISO 20022, it speaks it natively. This is why many analysts now call Quant the middleware of global finance. Part 10, the endgame, the unified ledger world. The Bank for International Settlements calls it the unified ledger. A world where money, assets, and data coexist on interoperable ledgers governed by standard protocols. Oracle's Digital Assets Data Nexus is a commercial embodiment of that vision. Quant's Overledger is the interoperability fabric. Together, they form the early blueprint for what the BIS and central banks are planning, a programmable, interconnected, tokenized financial ecosystem. In that world, borders fade. Payments settle instantly, every asset is tokenized, and compliance is built into the transaction itself. It's not about replacing banks or currencies. It's about upgrading the global operating system of finance. Conclusion: the invisible revolution. Most revolutions make noise. This one hums quietly in the background, in Oracle's data centers, in Quant's Overledger nodes, in ISO 20022 message schemas spreading through the world's payment systems. By the time most people realize what's happened, tokenization won't be the future. It will simply be how finance works. Oracle and Quant are not creating another blockchain project. They're building the foundational infrastructure for programmable value exchange, the next internet of money. And as history shows, the companies that build the rails often control the future. So while the world debates which coin will moon, the real power lies in those creating the infrastructure, those connecting the systems that will carry trillions in value every day. That's Oracle, that's Quant, and this, the Digital Assets Data Nexus, is the quiet engine driving the next financial era.